this area, this is a Wednesday. This is Thursday. So basically, Wednesday going to Thursday, we gapped up. So usually when we get a gap, these areas are known as a high momentum. So the fact that we had already created a high, you should always mark out your lows. Highs and lows for the session. They should always be marked out. This is a must. Again, like a very, very must. You can also mark out your liquidity zones, but if you kind of already know where you open up at, so this is where we open at 30, technically. So I make sure the guys are all the way up here, and if I would have been using to layer down the line, as you see, if nothing touched it, then it's still valid. So let's just go ahead and switch the time frame to something higher. 15 minutes just shows you overall what's actually happening. You see the bigger picture. So this liquidity zone is still valid. We haven't gotten any blow-throughs yet. Like price hasn't just completely broke through it, so it hasn't become invalid yet. As you can clearly see, we rejected off of it, and this is pretty much at its highest point so far. Not as high as it was so far. Anyways, I want to have this line. This line needs to make sure, like, you need to make sure this is always this is always viewable, no matter what day it is. Until you create a new high, that high should always be present, so that when the next trading session begins, you are likely to target. Just based on how prices been lately, we're all anticipating a new high. It's just a matter of time. Probably on Monday we're gonna get a new record. This is gonna be a new all-time record. How do we know this? Switch to the daily chart. That's the highest we've ever been, which is weird to figure out. Switch to the 4-hour. You still see it. So you should always use the bigger time frames to see the overall trend, and you can also use these like to help you determine where the bigger lows and highs are. Obviously, if you can prepare and do a lot of stuff early, what's the harm in any of that? It just helps you be a little bit more prepared for the next trading day without actually having to waste time. So whatever gaps that you usually have, try to mark them out. Just in case price goes into a certain area, you already know what is kind of like, what is it doing? What is the lowest the price can come to in this area? Is there any reason that price would want to come to this area? Oh yeah, there's a gap right there, of course. Alright, so I want to switch this back. Just go back to my 5 minute. So I want to go ahead and just label this. Until we get a fill, that's just gonna be right there. Label gap, just like that. Okay, so let's zoom in. So in case you're wondering what this is right here, this would be a trade. Like if you want to take a trade, this is exactly what it looks like. So we have a gap fill right here. Whenever price has a gap, we have a very likely chance that we'll try to come and fill it. And I'll show you another example of this later. But as of now, we came to the gap. Let's say you missed this opportunity. You're waiting for the next trade. We had a little bit of consolidation here. Still trying to wait to see a bigger move play out. We started to get some more. After that, I could have also entered on the trade, but if you wanted to still play on the safe side, wait until you see some pullback first, because usually when that pullback happens, it'll tell you one or two things. Either we're going to get a reversal, which will look something like this, coming down, we get some pullback, and then for the sellers, instead of them being the lead momentum, or buyers being the pullback, now sellers have become the pullback, which is like something like this. We start going up. Sorry for the crookedness. We start going up, something like that. Let me just see if I can redraw that for you. So we're coming down. We started to get some pullback from buyers. The sellers started to push back down. They try to go back and gain momentum again. The buyers stopped them short. Then we turn around. That's what can end up happening. Or as we're coming down, buyers come in, you get a pullback, you buy in off of the entry, and you ride it down. Now, if you buy in on a pullback, where should your stop loss be? Technically right, like just a little bit above where you entered in at. That's the way where it should be, which is why you saw what you saw. So we're coming down. We're still looking for an entry. Oh, there's a pullback. There's a pullback. This little red candle should not be enough reason for you to want to get in just yet. You want to see a bigger move play out. You want to see more rejections. So okay, buyers gain more momentum, because if you'd have bought in early, you would have been losing money right now. All right, buyers still have momentum here. From here, it looks like anybody's game. But remember, we have a gap up here. This area we have major reactions. Major reactions. So usually we'll want to, before we get in, wait. Oh, they got stopped short. Got stopped short right up here. I would have marked this line out, but I haven't. Okay, so notice marking out all of my highs, all of my lows. It helps for the next day's trade, and even today's trade. For the people who don't want to overcomplicate their trading with a lot of zones and stuff. So we enter on the pullback. Where's our stop loss? The stop loss is technically right exactly above where we entered at. Some people have a bigger stop loss based on their capital, but that depends on the person. So if you're just playing it smart, playing it tight, this is pretty much what it would look like. And obviously, if you break through profits out of your zone, which remember, this is the structure point. Why is this a structure point? Because remember, when we were heading down, we got some pullback from buyers. So the seller's momentum ended. So now you have to mark this area out. So if you're looking for puts, this would be a support area for you. So it'll be a structure point or a support area. Now, if you're looking for calls, this will be resistance. Because if, let's say, buyers reverse the trend right here and they continue the uptrend, this area down here now becomes resistance. Because if, let's just show you an example of what I'm talking about. So if we came around, we reversed and we came up like this, right? And we started to get some pullback again to the downside. Now sellers are the resistance now, correct? So if we come down to the zone, this is a major area of resistance because we had a large reversal right here. So either sellers can keep going to break through this, which would be your MSS market structure shit, with changing directions, or it's a big reversal off of that. That's a lot of liquidity. So as you can clearly see, we got to this area. We see a consolidator. It's exactly, of course, it's a structure point. That's usually what happens in structure points. If I zoom out and I show you the overall chart, you can pretty much see a good example. Like you can mark, this would have been a structure point. Let's see what happened right here. We came up, we gapped up right there. So we came back into the same area again over here. We did a lot of consolidation. Structure points are very valid. All right, so this would have been a winning trade. We've already been done. If you wanted to still stay in this trade and get some more profits, some people would have probably got scared and gotten out right there. If you have a smaller move and probably playing it bigger, you probably won't get out until price comes above this. So that's why we mark out these structure points. So let's just go ahead and remove this. Some people don't even draw those muscles and stuff. A lot of people just like to use just the lines. And it's okay, the structure points, it helps. Some people, this is way simpler for them. They have no problems with this. So if you were still riding this trade out to the downside, what would be your new stop loss now that you pretty much target price? This area right here. So if we break through this, this is going to be known as a breaker structure, also known as a BMS. Turn around, do something like this, break through it, consolidate, touch, and continue. We just broke structure. That's why these structure points are very, very important. So you're still running straight out. Technically, by the time you got here, you should have already been done with your trade. There's no reason anybody should still be sitting in this. Look at all this consolidation. There's a lot of time decay for anybody who's trading options. Futures, they have the luxury. For us people who do options, we do not. And this is already 2 o'clock. This is 2:30, 3 o'clock, 4 o'clock. This is real close to market closing. You should not want to be close to market closing. You should not want to be in here. So this would have already been a successful trade for the day. It took a little minute to work out there. So we're going to be an hour for this. So if we wrote this trade out, this would have only taken around 30 to 45 minutes. That would have been a nice trade. If we wrote it out to down here for a bigger target price, that would have been even nicer. So anyways, this is our liquidity zone. Just draw it out just like that. You can always note in it if you want. And the fact that I've already seen that this is an old New York Open at the top, also the all-time high is up there. So mark that. Mark that as well. Very top. All-time high. Very top. These days, there, so we came, we touched it. We have these are major points for us, like really major points. One, because we have liquidities on there, and two, because we have the all-time high ceiling right there above the liquidities on this. So no doubt about it, Monday this will be but we pretty much get a full break retest. This week. So we did not break it. So initially see that sales guys not short and into a trade here. Where'd you looking to take profit? Come on, realistically right here. This should be your take profit for one of these highs. But whatever the previous high was, which is right there, that's what your high should be. I mean, that's what your profit should be. You take profit. So we're looking to get as close as we can to that. Starting to get like a lot of consolidation. Just get out, take profits when you're up. Because technically, if you buy in the lowest, you buy low, sell high. You're always going to get profit. Versus buy high, sell low, you're going to lose money. So let's think about this. I like to sit down for 1 minute once I'm already in my trade so I can see everything that's happening. And just can't be scared sometimes when you see stuff like this because if you're on a 5 minute, it's not so big as it seems. Like if we switch to the 5 minute right now, go back to that, that's all that was like. So, you can't let 1 minute scare you. That's why it's not recommended that you enter a trade based on 1 minute unless you're in a scalper. But anyways, I would have been looking to take profit somewhere up here. But noticing that we had a major rejection off of this point would have been the very first spot that I had marked out. So I'll mark this out. That would have been my structure point. Slash my take profit. Remember, it's bought low. So regardless, all this is profit. So once we pass this, this pretty much becomes my stop loss. So it's like I take profit, so I stop loss. So I stay in. I'm trying to make just a little bit more money. As soon as we hit past that and start to see, like, okay, see this green candle come up, okay, I'll still be in a trade. This was a green candle at first, but it got shrunk down to this. Okay, it's like, okay, that's fine. It's just I'll be like, you won't be out the trade until we pass this. So we don't pass it yet. We're not passing it for a full close below this. No. Momentum candle, okay. That one right there, we've got me out right there. Then I've been like, now if I would have gotten out up here at the top when I first passed it, I wouldn't have lost any of my profit. So see, it's a matter of this. See the difference. A small difference like that can make a big difference depending on how much money you have inside of it. So you may garnish, let's say for example, you got a lot of money, you could garnish a few hundreds of dollars out of your profit off because of a momentum candle like this. And then there's no telling how fast this form. You probably might be trying to sell and your price doesn't get filled in, and now you're losing money. Price came up again later, but see, there's no way you could have known that this would play out. So don't even think about it like that. This would have been a successful trade for us. We would have done. We bought at the lowest point down here. We rolled it out to this point where we had a rejection off of. Usually, you should want to get out where we had points of like consolidation. That's why if you playing it smart, you're playing on a few contracts. shorts. It's an easy way to play this out. You want to see, okay, we're going to change directions here. So as we see throughout the day, we're not making any new highs, especially after we have rejection up here. Consolidated for a little bit. So honestly, I would have been looking for a short and entering off a pullback. I'm like, okay, let's wait. We got some pullback from buyers right there, entering on a short. And now we're sitting in. So we're entering right around here. So we're entering around there. It's going to be a pressure point. It's also going to be our stop loss at the same time. We enter off a pullback, and now we're just riding this out to, let's see where we have rejection down here. I never heard out this. So I'll have that mark in green as my take profit area. Let's convert this. I'll allow it to come before I get out, because after that, the only thing I can assume price is coming to do is to come and fill this gap. But there's no way for me to just working this out ahead of time. Like I said, I'm preparing myself. Trade on Monday. So S&P 500, see. Okay. Okay, so remember we entered some shorts. Looking to take a profit at the green line down there. We see that there's a gap down there as well, so obviously there's room to ride it down further, but at some point, honestly, this would be a very, very good trade, especially if you entered in off a pullback. If you bought it initially up here at the highest point, that would have been amazing. Oh my gosh, that's tons of profit for working up on this, especially the contracts they break all the time. So congratulations to anybody. So that's a major structure point for us. Or you could say like later down the line, like price. So yeah, anyways, if you're yesterday right here, this mark, you would have rolled this out to here. This would have been a very nice trade. Beautiful trade. Done, and now you have everything called both moves. Pretty accurately. So that's why some people trade off to 15 minutes so they can just see the big moves of the day. They would have noticed we got probably would have missed all of this. If case they were scalping, they probably switched to lower time frames. But let's say you were waiting and you were just waiting to take on 1 to 2 trades. You're waiting for the big move to play. Understand in the 15 minute, you would wait for the big move to play itself out. Oh, we got pushed all the way to the top where this New York open is, and they were getting rejected off of it. So this was a battle. And then the second candle, I would look for shorts from here. I've been riding shorts out all the time. After this candle came in and touched pretty much where we opened up at, I would have been done. And I was waiting for, if I was waiting to take another position, I would want to see either I enter from here and ride it out to up here, or I just wait to see if we're going to continue going this direction. So which one would I do? I would actually enter from my position, because obviously we're going to get some pullback here. Obviously there's one against the trend at the same time. The trend so far, actually we haven't really fully established the trend. Technically, overall trend is bullish, as we already previously stated. So putting in a call right now would not seem like such a bad deal. And the only reason we continue on for shorts because of how high we rejected off that previous trade. So the fact that I could pretty much enter in for to scalp or get one final move of the day. What am I looking to target? Well, this is the first initial area for me, at least. Why am I saying that? Because one minute we actually did have. So if I was looking for a position, then I know that we had some rejection there from the 1 minute. Just for me to stay confident and staying in my buy position, even though we got a lot of consolidation going up the top, I would have wanted to see us break this trend line. This trend line, that's right. This was a lot of that's very choppy. So a lot of people probably stop over here. Honestly, probably pretty much came over up here and we started to come back. I would probably waited for price just to come right back up into the area again, meaning like, okay, we got up here. I thought I said I didn't take a profit because usually not perfect. We don't take a profits, we get pulled back. I'm like, dang, I just garnished a little bit of my profits. I'm gonna just wait a little bit. So your stop loss at this point should be somewhere around here, but you're just trying to give price a little bit more room to move. Remember, you bought low, so you still have all of this profit here. So take it out here, you're still good. So I would allow price to come back here, come back up. It has come to this point, I would have got out. When it came up here, I would have got out, and that would have been pretty much it for the day. Yeah, price came a little higher for the day, but that took a while to play out. So remember, everything that you want to identify, you have, anytime you have a gap, mark it. Your liquidity zone, which is the first zone of the day, mark it every time. Structure points, pretty much you make your structure points off of highs and lows. That's it. It's nothing complicated. Literally, you make your structure points from highs